We just have a quick question here from Stephen, who says that we are taught to give trades room to breathe, but also at the same time taught to cut losers short or quickly. And Stephen would like to know whether what's our perspective on how to handle the two. So thanks for the question, Stephen. I think this is a very important point you are making and can be somewhat challenging to grasp. And for me, the answer comes down to what a stop loss is intended for and how we should place them based on the different trades that we are taking. So stop losses should be placed based on both the sentiment and fundamental drivers for the trade, as well as the technicals. So for me, placing a stop without taking both of these into consideration is obviously dangerous. So looking at the sentiment and fundamental aspect of a stop loss placement, it all comes down to two things really. Firstly, the time horizon that you're trading, whether it's intraday or swing trading. For example, if you are taking a day trade, unless you are trading something with a very high beta, you are probably not going to aim for massive stops, of 100 pips or more, just as an example. The odds are that you will know whether you are right with your trade or wrong a lot sooner than that if it's a day trade. Whereas with a swing trade, you need to account for the possibility of the market moving against you based on short-term catalysts, and that means pushing your stop out to more safer and more anchoring spots. And in both cases, really, whether it's a swing trade or a day trade, the technicals will, of course, help you guide on where you think you are wrong on that particular trade. Let's take the pound dollar, for example, right? So we have that downside bias today. And let's say you take an entry at the 132 psychological level. From an intraday perspective, in terms of the technicals, we know, or the sentiment and fundamentals, we know the bias is tilted lower. And we can probably argue for two places for stops from an intraday perspective. The first one is above this swing and above the daily pivot. The second one is arguably above this swing, maybe even above this most recent resistance area. So that gives us a good range to work from a potential stop loss point of view, which if we do take these levels out, of course, that will tell us that we're wrong with that intraday bias. From a swing trading perspective, in this chart, the most obvious one would probably be anchoring it above that 135 psychological level. But in both cases, you would be giving your trade some room to breathe based on the time frame that you are trading. So you're not going to take a trade at 132 on a swing on a day trade and anchor your stop above 135. I mean, that would never make sense from a risk to reward point of view. And also, you don't want to be taking it so tight that you're not giving it that intraday room to breathe either. But from a technical point of view, whether it's a swing or day trade, that should give you a gauge of how much you are willing to allow the trade to run against you before you know that you are wrong. Now, the second thing comes down to the thesis of your trade, right? So whether it's a swing trade or a day trade, even if you haven't hit your stop loss, once the reason for entering has changed, once the sentiment or fundamentals for entering has changed completely, that is where you cut your losers quickly without bothering to worry about where your stop loss is or how far you are from your stop loss. If the reason changes, if the sentiment and fundamentals changes, then that's just going to be your quick get out of the trade card right there. If the reason for you expecting a specific move suddenly changes, then there's really no reason in you holding on to that trade anymore. And you can just cut that loser quickly before you take a full loss on the trade. Now, sometimes, we might be correct about the direction based on the sentiment and the fundamentals, but the market might squeeze us out of our position if we trade with too tight a stop. That's why we want to give our trades room to breathe. And that is also why, trading without leverage is so important, because without leverage, we can afford bigger stops on our trades, right? We're not taking, a 1 to 10 leverage by anchoring it, just above this 132 because we want to make more on the move lower. We expect it to move lower, but we do also, leave some room for a potential test higher and then a move lower, just as an example. Now, as we said, sometimes the market will take out our stop, even though you gave it room to breathe. So let's say you took an entry, as we said, at 132, and you placed your stop just above the daily pivot, which I think is a fair spot. Let's say you did that and the market takes you out at that level. That might be due to the market simply squeezing in the opposite direction, or it might be due to the wrong analysis on the trade, or maybe even the wrong timing on the trade. Obviously, your analysis after the trade will reveal which one it was, but in simple terms, the breathing room comes down to the rationale, the time horizon, and the technicals, all of them combined. And cutting short comes down to whether the reasons for entering has changed or not. And if the reasons hasn't changed, and the market moves against you, then we are either wrong on the analysis, or we are wrong on the stop loss placement, or we are wrong on the timing. In either case, though, trading without leverage is very important, and the stop loss is there to make sure that we are taking manageable losses, and managing our risk, basically taking us out when either of these three conditions are met. So it either proves that we're wrong on the analysis, it proves that we're wrong on where we placed it, or wrong on the timing of the trade. That's why risk management is so crucially important, because you can be right with the trade, but have your timing wrong, for example, or you can be right with the direction, but you have your stop loss wrong. I mean, the market might move against that trade so aggressively that it would be best to get out at your planned risk and wait for another entry point, for example, if another catalyst should arise. So, the balance for me comes down to knowing why you've placed it at that level. So basically, considering your sentiment and your fundamentals, considering the time horizon you're placing, and considering the technicals. And you know, the only time when you would cut that short is if the reason for entering changed. If the reason for entering hasn't changed, and you hit your stop loss, then you're either going to be wrong with the analysis or the timing, or maybe just where we place the stop. But either way, it's there to make sure that that the risk we're taking is manageable on every single trade, because we will be wrong, right? There will be times when we were either wrong with the analysis, either wrong with the timing, or just wrong with where we place the stop. And obviously, the most hurtful ones are when we're wrong with the stop loss placement, right? Let's say you place your stop above that daily pivot, and the market goes up, it tests, it takes that out, and suddenly tanks to the downside. These are the most painful ones to deal with, because you weren't wrong with the analysis, you weren't wrong with the timing. Well, maybe the timing was wrong as well, we don't know. But let's say you entered at a key level and the market just took you out and then moved against you. I mean, these things will happen. If there was a reason, of course, for the market to move against you that way aggressively, then you could have said, okay, I could have taken, I should have cut the trade. But if there was nothing really causing a change in the sentiment of fundamentals, and you get taken out, it's going to be it's going to be down to one of those three. But the balance factoring for me is, where you're placing it based on the horizon, the sentiment, as well as the technicals. And the most important one is, the only time that you would cut that loser short is if the reason for you entering it has changed.